You're listening to the Cash Flow Academy podcast with Andy Tanner, your source for investing made easy. Here's Andy Tanner.
Welcome to the Cash Flow Academy podcast. I'm Andy Tanner, your host. This is where investing is made simple, and I congratulate you for taking some time to invest in your financial education by listening. We, as always, have a fabulous program set up for you. You can tell I'm smiling because I have two just dear friends, among the best people that I know. We have two gentlemen from Fortune Builders, and if you're unfamiliar with Fortune Builders, they're a real estate education company. They also have various companies that help people actually invest. I've invested with Than Merrill, Paul and JD Asajian in some of their syndications personally. So I've been grateful for these contacts. And so first we have Jeff Rutowski with us. Jeff, how are you, buddy?
Doing great, man. Honored to be on your show, man. This is exciting.
Jeff's daughter and I have the same birthday. So I've known Jeff for many years. He's a great man of faith. He's one of these guys that walks his talk. And it's just been an honor to know him. When I talk about Jeff Rutowski, it's, there's a saying someone once said, I think it was a pastor, it says, people, men are starved for the eloquence of example. So Jeff's not a man of many words, but the way he lives has just been a great example to me. So Jeff, thank you. And we have JD Asajian in the house. Hey. Man, how are you, buddy?
What's going on, Andy? It's always great to see you and talk to you. I'm doing good. Thank you.
Yeah, Paul, his brother, Fortune Builders was founded by Paul, Than, JD. You guys had CT Homes.
Yes, sir.
For a number of years, you've had CT Homes, which the CT stands for Connecticut. So now you're in San Diego. So you can explain how that works.
It does. Yeah. We're on almost our 17th year of running CT Homes since late 2003.
And how many houses do you think you've purchased in that time?
It's over 1,000. I don't have the exact number in front of me, but like sitting here right now in San Diego County, we've got 39 homes that we own just in San Diego County that we're renovating, fixing, and selling. And that's been pretty consistent over the almost 17 years now. We do about 100 transactions each year in our local market. So, to stay busy.
I was going to say, to buy and renovate and sell 100 homes a year, that's one every 3 days. I mean, when you think of the scope of what it takes to do that, and your renovations are not small. Okay. I see them on Facebook. These are not, carpet and paint.
Yeah. No, by no means. I mean, we're moving layout changes, new kitchen, new bathroom. So yeah, we stay busy. Systems, Andy, as you know, systems is what gets that done.
And I will tell you that I just love your brother Paul as well. He and I have a similar taste in music. And so I just will tell you, I've known these guys for years and years and years, and they're just solid. So we're going to talk about the real estate market. First of all, JD, talk a little bit about your background, how CT Homes came to be, maybe the flip this house craze that's the reality. You guys were among that first in the reality show stuff. And just your background and what brought you here.
Yeah, well, certainly. I mean, after, my brother Paul and I, as you mentioned, and Than Merrill, we all grew up in the Central Valley of California. And then after college, we were kind of dispersed, and we came together in Connecticut to start a business and tried a few different things and landed on what we now do today, which is real estate. So that was late 2003. I mean, my background, I actually went to school for agriculture, which the line between agriculture, yeah, farmer. I was a farmer. Yes, wranglers and ropers. But
none of us are going to confess our majors in college, okay? Because one of mine was exercise physiology. If that's just most frightening, if that's the most frightening hypocritic statement.
Exactly.
I don't know. You're looking pretty good nowadays, Andy. Looking pretty good.
We're trying, man. So. But you guys know I almost named my kids Ben and Jerry, so it's kind of rough. So you guys put together CT Homes and started honing. So these systems have been honed for 17 years now.
Exactly.
Years.
Yeah. I mean, I'm coming up on 17 years and into 18th year. Yeah, we didn't have a real estate background, so we knew we needed to lean on systems, and we started identifying, adapting, and refining them in those in those early years. And whenever we made a mistake, and we still do today, we learn from it, we adjust a system, we create a system so that we don't make that mistake. And that's been the philosophy pretty much of all of our businesses, if you want to boil it down to simplicity. Yeah, that's how CT Homes was founded, and we still do that business today. And we love buying, fixing, and selling residential and now multifamily properties. And we invest in commercial assets, as you know, and apartment complexes, and that's grown as well. But our core business still exists, and it exists at the highest level, and that's CT Homes.
So what brought us together is obviously you also have syndications, and I think you're closing in on $1 billion there.
Over now, we're close to $1.5 billion.
Oh, Jiminy Christmas! Look at my watch, and it's another billion by Fortune Builders. $1.5 billion. That's not a small number. Even we're going to talk about some bigger ones when we talk about the Fed here in a minute. But that's a lot of experience, and people will, I've heard people dog the idea of flipping a house, and I could dog it as well if people didn't know what they were doing. I would say that, you guys are almost closer to developers. The amount of systems, no one would ever say, oh, here's a guy that found some land and renovated the land and put a house on it and made a bunch of money. No one would ever decry that. But as soon as you say, oh, I'm going to flip a house, well, now you're this village raping crazy man, But the stuff you guys do, it beautifies communities. It's almost a total reconstruction a lot of the time. It's amazing.
It is. We've termed it, residential redevelopment. I mean, that's the term we use because, as you said, house flipping has unfortunately gotten a bad rap. Some of that is through the TV shows that are on, because there's a lot of them. But the reality is, there's a lot of great investors out there that do residential redevelopment. Improve houses, improve the community, stimulate the economy, increase the tax revenue for a local community, employ people, right? I mean, it makes a big difference whether you're doing one or more than one house. So yeah, we do residential redevelopment, which is a very professional way to buy, fix, and sell a home.
Well, you've had a great impact on me and also my family. My sons, they're supposed to be stock guys. I mean, we're trading stock, we're trading options, and they hang out with Than and you and Kenny McElroy, and they want to be. I want to do what Than does, Dad, is what they say. So this is great stuff. So that's a little background. Lots of syndication, raising capital. You also, passive income from holding rentals is a huge part of your business. It really runs. There's really not a place of this you haven't touched. You guys, I saw. About once a month, you're purchasing major projects, shopping centers, and you've even got stuff overseas. So big guys. Yes, so let's talk a little bit about this. Real estate market's been hot. It was reminiscent of the 2000s, up into 07, 08. And you guys went through that, and you guys are some of the people that actually did very well in 08 in that crash. So you've been through this. What do you see in terms of, real estate's just been hotter than heck, especially in my city. I mean, my gosh, I'm getting people calling me, making offers on some of the properties. I don't own near what you guys do, but some of the properties I own, I'm like, are you kidding me? Is it really worth that much? Yeah. Can you just give Jeff, JD, we'll start with you, Jeff. What do you see in the real estate market right now?
I mean, like you said, Andy, it's an incredibly hot market, and we actually just JD and I were out in Orlando last week, teaching and training a lot of, up and coming investors. And that was a big question, obviously it's been hot, do we see continued appreciation? Are we in this bubble that's about to pop, and obviously nobody has a crystal ball, but when I look at a few factors, Andy, when I look at, record low interest rates, first of all, we have, the Fed has the federal rate set at 0 for, I believe, only the second time in our nation's history, and almost, has created a dependency on these lower rates. It's kind of like, I use the analogy of almost like a drug addict, right? Where the best thing is just to go cold turkey, and suck it up. It's going to hurt, and almost one of the best things I think the Fed can do is raise the rates, but because of the dependency they've created on it, it makes it super difficult. And then you couple that with record low inventory right now. My wife and I just purchased a house about a month ago, and in the zip code we were looking in right now, they currently have 0.6 of 1 month of inventory.
Wow.
I mean, it is a seller's market. And then, as you mentioned, we're as a government, we're printing a little bit of money. Sounds like there's a lot more to come, and that's one of the biggest drivers. And one thing that also a lot of people I don't hear a ton of people talking about, but we got the Fed with the record low interest rates. We got the quantitative easing at record high rates. But you also see about, I think it's about, last time I looked, about $120 billion a month that they're picking up in federal bonds, and Ginnie Mae is actually pulling at about $4 billion a month, and actually of distressed loans, and they are modifying these loans into 40-year mortgages for these folks, which obviously is just going to increase buying power. So when you look at a culmination of all of these things, I mean, obviously we can't sustain the growth that we had over the past year, but I see maybe it growing at a slower rate, but definitely not reversing anytime soon.
So JD, let's talk about this. When people, the stock market is the same. It's sitting very close to all-time highs. And when I look at the stock market, when I look at it through a real estate lens, which is exactly how I look at it, I just look at it as businesses. That's how Buffett looks at it. You're paying more now for less earnings than any other time other than 2000, when internet companies had no earnings. It was all speculation. So, generally, and, it's very similar to cap rate. Cap rate is your NOI divided by your price, basically income divided by price. And PE is just flipped in the stock market. It's the price divided by the earnings. So it's the same number, it's just flipped.
Yeah.
And people are paying, a lot of money for stocks. And what I tell them is they'll say, well, it's a good time to get in the stock market. And they might ask you guys, was a good time getting in the real estate market? And my answer to that is always, well, it depends on how much you know about stocks or real estate, because the markets, to me, I look at Warren Buffett, it doesn't matter if it's up, down, sideways, it's about hunting for value. And if I can, I found even in the midst of these huge, levels of the stock market, I can buy stocks this week. There's stuff out there that still I see value in. Is it the same for real estate? I mean, does it really matter what, when people say, oh, it's a good time getting real estate? Well, if they don't know what they're doing, probably not. And if they know what they're doing, probably. I mean, is it the same?
Yeah, yes, it is. I mean, that is the number one question that I get asked is, is now a good time? Well, number one is the market going to crash? Number two, is now a good time? And the answer that I give is very similar to what you just said, is yes. Whether the market's going up, whether the market's going down, or any other direction, it all depends on how you buy, and where you buy in that time of the market. Now, I definitely wish I could go back 10 years and buy everything I could get my hands on, as would anyone. But the reality is right now, even though we're paying extremely high prices for real estate compared to in the past, if you're analyzing your market and you're knowledgeable and you're studying the national and local stats in your market, and you're doing that, not infrequently, not monthly, but daily, as with market knowledge, and whether it's in stocks or real estate or any other discipline, then you can get into a market, stay in that market, or get out of that market fast, like we do in quick turn real estate, residential redevelopment, and make a profit, and the big thing is how you buy. We make our money when we buy real estate, whether it's distress, a physical distress of the property, whether it's a distress of the seller financially, emotionally, or a combination of all those things, frankly. And when we can solve that problem, whether the market's shooting up as it has been, or it's leveling off as it will, or going down like it will at some point in the future too, you can not only help people, but you can make money in that market. So very similar to what you described in the stock market.
So we'll talk a little about education, and it's a very difficult, financial education is very difficult for people.
Yeah.
For I think a number of reasons, but here's at least two. Number one, it's not prominent in school if it exists anywhere at all. I mean, even if they make an attempt at some class, it's not a prominent part of most people's high school and even college education. The second, the more important one that I find is, we've talked a lot over the years, the three of us, about context.
Yeah.
It's a totally different mindset. It's a totally different approach. And the question people ask me, is a good time getting stocks? Or the question they ask you, is a good time getting real estate? Is a funny question because it comes from the advice culture, as if their decision to buy the asset class was going to determine their success. I'm going to say something. I know you guys will agree with this, but for the listeners, see if when I say this, you feel inside something ring true, that your success as an investor in any asset class will probably be a function of your own personal development in those skills, as opposed to finding one asset class over another. Because I can find people who have been destroyed in the stock market, destroyed in commodities, destroyed in real estate. On the flip side, Warren Buffett, guys in the stock market, guys like you in real estate, you can find successes too. So let's talk about the education component. The fortunebuilders.com is a great resource. And I've sent thousands of people there over the last few years. And I've worked intimately. Than and Paul and JD and Jeff, you guys have been kind enough to invite me to your annual event that has been held online the last couple of years, in Vegas before that. And I don't do much speaking anymore. I like to stay home and eat ice cream. But I will always make time for that event, because you guys and we have the same mission, which is to elevate the financial well-being of all humanity. And so let's talk a little bit about the education piece of fortunebuilders.com.
Sure.
Because people saw you guys on Flip This House, and you're doing this, now you're doing 100 a year, and there's, okay, how do you do it? Can you talk about how Fortune Builders was born out of that, and how you feel about the mission?
Yeah, I mean, I could definitely speak from my personal experience. I mean, the mission of the company, is to empower your purpose through financial education. We believe that everybody, was created for a specific purpose, here on this earth. But the reality is, as we all know, the majority of our population, lives paycheck to paycheck. And never really has the opportunity to, to think bigger than that. And it's really financial education, which is it's been the key, in my life. A little bit about my story. I got out of the Navy when I was, about 21 years old, and spent a couple years investing in real estate, rode an up market, that was covering a lot of my mistakes, and got into a large development deal and lost it all, over $7 million in debt, but $4 million in assets. It was a very painful
Oh my
education.
gosh, I can't imagine.
And and it was, shortly after that where, I ran into JD and, Than and Paul, and they were launching Fortune Builders. I was blown away, just by the level of the systems and the education and the processes and the ability to, to learn from their mistakes, and just, kind of step into, that atmosphere. But, in any asset class, there's risk, and risk can never be eliminated. But in my pre-Fortune Builders life, it was low education, so very, very high risk. Now over the years, I've switched it to where education very high, and there's always a risk, but it's an educated, calculated risk. That's a huge difference.
So people can go to fortunebuilders.com, and they can also go to fortunebuildersbonus.com and get some free stuff. Yes.
Yeah, actually, the place that I recommend, fortunebuilders.com, that's our main page. It's incredible resources, so many different things to learn, blogs, links to the podcast and all of that. But honestly, I think the best place, if you're listening to this show right now and you have a general interest in getting started in real estate, or maybe you have an existing business that you're looking to scale, fortunebuildersshow.com. It's actually, you could sign up for a free one-day virtual class, actually with JD's business partner, Than Merrill, and learn from the best of the best, the system. They spend a lot of time on what JD says on how you buy real estate, because it doesn't matter what the market's doing. It matters what you're doing in the market. If you know how to buy, you'll be successful in real estate.
People, it's easy for businesses to, write down a mission statement and write it down. And, you guys have, 5 important values, ethics and integrity, inspire, which means to put breath in people and inspire them to educate, lead, and to crush it. Those are the values. And the reason I don't lend my name to very many educational institutions at all. And I'll tell you, I do that with you guys with 100% confidence because of how you live. Is your values are not a litany of attributes that would be just recited. They're really part of what you guys strive to be, and that's why I love hanging out with you guys. Let's talk big picture. I have to ask you, we got just a couple minutes left. Evergrande. What the heck, man? Personally, I think when the stock market gets hot and it needs a pullback, they'll find some reason to blame and let a little air out. But what do you guys feel about Evergrande in China? Can stuff like that happen to BlackRock? Or, I mean, how do you get, $300 billion in debt? You guys have done 1.5 billion in real estate. They've done 300. Largest, group in China. People are knocking on their doors because they said, we're not going to be able to pay our bills. They've leveraged too much. Any lessons from that? Any forecasts or general comments on Evergrande?
Jeff, you want to start?
That one, JD.
Okay, I'll go. Yeah, I mean, I've been reading and trying to wrap my head around also how something like that happens, but you get so big and you lose sight of some of the important details and you don't have oversight. So definitely something that we all have to keep our eye on, and certainly possible for large, companies in the United States that own property as well, that aren't as heavily regulated or looked at. I mean, it's scary to think that can happen to that magnitude. But as far as how that affects, I mean, specifically how we've seen it most affect whether it's the pandemic or then now this new situation. I mean, getting material, things that boil down to the everyday transactions that we're doing, waiting, 6 weeks for a garage door or 8 weeks for appliances. Sounds like a small thing, but when you multiply that out and the supply chain issues that creates, it's significant, and it costs not only time, but money. But I think it's not focusing on the right details and paying attention to those things that creates those kind of situations. And when you get bigger, those things magnify.
It'll be interesting to see if the government's, the talk is we're not going to bail you out, and I think that'd be interesting. Jeff talked about ripping the Band-Aid off, and there's this idea of too big to fail and too big to bail. Yeah. And I think the government will buckle and have to bail them out, but who knows? We'll see how that unfolds. But it's always a great lesson that whatever level you're starting at, if Evergrande can make mistakes, certainly the layperson who decides to do this should say, you know what, education first, investing second, learn before you earn. Absolutely. and then off you go. Fantastic.
Education is huge, but one thing I like to end, just be careful also who you're getting your education from, who you're learning from, and that's one of the reasons why we wanted to, launch, our podcast, our show, Fortune Builders Real Estate Investing.
And that's Fortune Builders Real Estate Investing Show.
Yeah, we wanted to go with a really short name. So it's easy to remember.
It says what you do. I mean, hey, what's wrong with that?
It is that.
Great information while you're exercising. Great information, when you're in your car. If you enjoy this type of podcast, I endorse these guys 100%. It's just awesome stuff. Again, it's fortunebuilders.com. Lots of free stuff. If you have an interest in real estate, definitely want to put these guys on your list of people, you want to learn from. Just wonderful, wonderful human beings. Any advice as we close, final words to the person who, maybe they've got a little bit of debt that they'd like to eliminate and they think, I'm not going to ever get out under this, maybe got student loans or maybe I've just, kind of screwed up with my credit cards and, Dave Ramsey in it, just not buying lattes. I've got to do something major. I've got to make a major move to get out under that. Maybe a person actually is doing okay, but they hate their job and they want passive income. Or maybe someone's more like me where they're thinking about, the grandkids and the kids, they want a legacy. Anyone that's thinking of those things and thinking maybe real estate is a vehicle for me, would both of you in turn, Jeff and then JD, any words for them?
Yeah, well, I mean, to the person that's struggling with a little bit of debt, like you mentioned, my number one piece of advice would be get into some more debt. Just make it
Fight
good.
fire with fire.
Yeah, just get actually, to every category of person you describe, my advice would be to get into as much debt as you can, but make it good debt. Make it good debt. Obviously, if you listen to Andy Tanner, you should understand the difference of that by now. But debt is the number one accelerator to creating wealth. It's not, you can't save your way to wealth, you borrow your way to wealth. Obviously, education needs to play a huge part with that, but just get into as much debt as you can to get your names on as many pieces of real estate as you can.
If you're going to understand, I'll tell you, you have inflation and deflation, and I'm not very good at betting on stocks. I've been trading stocks for a long time. If you say, Andy, where's Tesla going tomorrow? I don't know. I have no idea. I've learned that. But the one bet, to your point, Jeff, that I would make is I think the dollar is going to lose value. And I don't know of a better way to short the dollar than income producing real estate using debt to do that. I do not know a better way to short the dollar doing that. So if you don't know what it means to short the dollar, go to fortunebuilders.com. Shoot, I've got free stuff on how to short the dollar on my website because I believe in it, 100%. JD, I'm listening to you guys and I'm thinking, I've been thinking a long time about getting involved in real estate or investing. What are you saying to me if I've been thinking that way?
Well, I would echo everything Jeff said and definitely everything you just said. And on top of that, I'll say a few things. A mentor of mine who's become a friend, I know a good friend of yours, also Blair Singer.
Yeah.
Once he said personal development and business development go hand in hand. You can't have one without the other. If you want to get better in business, you focus on yourself, and that's obviously education, but that's other things as well. So doing that is important. Focusing on yourself physically, mentally, spiritually, working on your education every day, getting better in some area of your life is valuable for anything that you do. When it comes to real estate, it's start now, right? Don't wait on the sidelines. There's always a reason that you can tell yourself, well, now's not a good time, or I'll get to it later. And if you do that consistently, then you look back and have always only done that. But if you get educated properly, and if you get yourself into good debt, like Jeff alluded to, and you focus on income producing assets, like you talked about, and shorting the dollar, you can look back in a month, in a year, in 10 years, not owning any real estate now or whatever you own now, and you can look back after 10 years and have magnified that substantially. So, but you got to start. You got to start, now doing something different. So that is what I tell people. Like when I got asked in Orlando last weekend at our event, 3 things I should do right now. Someone asked me, first question I got asked when I walked down from my hotel room, and I shared something to what I just shared on this podcast. Those are the things that make people successful.
You mentioned my friend Blair Singer. I've known him for many, many years, and he talks about the little voice of fear.
Yeah.
One of the ways you calm that is by learning. And so check out the podcast, Fortune Builders Real Estate Investing Show. Check out their website, fortunebuilders.com. These guys are among some of the best quality people that I know as human beings in terms of honesty, integrity, hard work, and walking their talk. There's just no one better. So thanks so much for your time. I'm so glad to introduce you to our listeners. I wish you the best of luck in your new podcast and all of the business. You guys always keep busy, and yet you have great families, and you just mean so much to me as friends. So thanks so much, guys. You've been listening to the Cashflow Academy podcast. I'm your host, Andy Tanner. This is where investing's made simple. We'll see you next time.
You've been listening to the Cashflow Academy podcast with Andy Tanner. For more information on investing made easy, go to thecashflowacademy.com.